What's up, everybody? Happy Friday. Today, we're going to be talking a little bit about what exactly do we mean when we say time in the market trumps timing the market. And I want to get into like the kind of the numbers, right? So like the mechanics of it, like why does that continue to be true like year in and year out? Doesn't matter if it's the hobby, doesn't matter if it's the stock market, doesn't matter if it's mutual funds. Why does that actually hold true? Like what is going on? And I want to just kind of lay that out for people, at least in the way that I kind of think of it. um, but before I get into that, just want to say, if you like this content, I'm gonna try to continue this going forward in 2026. As of right now, it's March. Hard to believe we are almost a quarter through the entire year, which is pretty insane. But my goal for this year was to try to post videos regularly, and my goal was like at least once a week, right? So, I posted a video yesterday or the day before. I don't know when I'll drop this, but and I've been pretty good about it, right? There's been some trips and stuff going on where I haven't been as good, but that is the goal. So I'm going to continue on, and if you appreciate this kind of content and you like what I have to say, or maybe you don't, and maybe it's a different perspective, and it kind of helps challenge your thoughts and your views, please feel free to give me a follow. Leave a like, comment below. Let me know what you like, what you don't like. It's all good. I can handle the constructive criticism, and yeah. So, anyways, let's jump into today's video. So, time in the market versus timing the market, right? And I think a lot of people who were here during the bear market of like your 2023 days, your 2024 days, which wasn't really that long ago, but seems kind of like forever ago if you look at all the events that have transpired between now and back then. um, People understand that, back in the day, back in those days, right, that 24 months ago, you were putting money in with no expectation that anything was going to move remotely fast, right? So you were buying, I know, like me specifically, and I say this a lot, but I was buying a lot of like build and battle stadiums, like from Lost Origin, Silver Tempest, whatever, ETBs of Fusion Strike, like battle styles, like the sleeved. I was picking up like sleeve cases of battle style. Like there's a whole bunch of stuff, right, where I was putting my money in. I was trying to build spend. I was trying to just like begin to churn through things, and it wasn't it wasn't very attractive, right? It wasn't something like, oh yeah, I just picked up this product. I can't wait to see it, like, I can't wait to see it, like right now you're looking at 151 or other sets. You're looking at a week later and it's up like 2, 3, 5%, 10%. Like there was none of that. Like that didn't exist, right? So, back then it was a little bit different. Like you really did have to, like the people who were around back then, like if you were really like consistent and you were buying, like you really believed in this stuff. Like you were really here because you understood long term the potential, you understood the hobby, you understood the IP, maybe you grew up with it, right? You wanted to just kind of stay a part of it. Um, Nowadays it's a little bit different, and that's, what I'm about to get into is not really the topic of today's video, but nowadays it's like if there's money to be made, it doesn't matter what it is. It could be selling toilet paper, it could be selling, masks because of COVID, right? People are going to come in and they're going to scalp things and they're going to do this kind of thing in order to make money, right? Like that's just how it works. That's the way it's a way a free market economy works. You just have to kind of deal with it. Capitalism is capitalism, and there are good parts of it and there are bad parts of it. If we look at the ethical side of things, and you just have to kind of deal with it, and you take the good with the bad and the bad with the good. Um, that being said, right, as we kind of look forward, right, and we look at you know where things have kind of gone, right. A lot of products have moved up, and um, I think people are losing sight of you know timing versus time in, and for the lack of time that people have been in this hobby, there has been a substantial amount of growth without any kind of heartache or pain or like tough times. And, you know, I kind of look at all this and I'm just like, man, I don't, I honestly, I personally, I don't, like if I came in during a time when everything was going up, everything was good, there were no misses, there were no strike threes, like you were, your on base percentage was 1,000, right? Like if if I came into something like that and then suddenly got back to like where we were before, that would scare the hell out of me. That would probably, I mean, if the baseline was batting 1,000 and 1,000% on base percentage, whatever, I think I'd be running for the hills, right? I would be trying to get out, because I didn't stick it out through the tough times, right? I wasn't here when it was tough, when it was hard to be here, and when you had to have a lot of conviction and you had to really believe in this stuff, right? So I think when we do eventually get back to that place, that a lot of people are going to leave, and it's going to create more opportunity, right? For the people that were here, stayed through this whole bull run, will stay through this whole next bear cycle, which is going to happen. Like you just and the bear cycle might look different, right? It might look different than it did before, but we're going to know because the bear cycle's not so much the prices, but it's the feeling, right? We had a little bit of that, not really, because it was just kind of the holidays, and that kind of tends to happen every year, and it's predictable, but it didn't feel good, right? When we saw the 10-20% retraces in, the late 2025, early 2026, it didn't feel good, right? So bear versus bull, yes, it's tied to prices, but ultimately it's kind of how things feel, right? Are you able to sell things? Is the volume there? Are you able to liquidate things when you want it for the price you want it at? Do you have to drop lower than you expect? Right, that kind of thing, right? It's a lot of things. It's a lot of different things coming together to classify a market as bull or bear. That being said, right, what is really going on when we say like time in the market is trumping the timing aspect of it, right? If you have, for example, this is kind of the way I look at it. If you buy a product and you have a timeline of a year, right? And you believe in the product, you believe in the IP, you believe in the trading card space in general, right? Well, over a year, the expectation, right? And yes, you're going to have cycles, you're going to have up and downs. The expectation is that either A, more people are going to come into the hobby in the space and be interested in it, or B, more money is going to come in, whether that's like nowadays we have like all this talk of institutional money and like bigger buyers and like people are buying and holding and they don't have to sell, right? So you believe in one of those two things, right? And if that comes true, a year from now, you might have, just for the sake of a year, you might have a net 1,000, 5,000, 10,000 people join the hobby, and they're bringing their bank accounts and they're bringing their disposable income and they're bringing their interest, right? So 10,000 people coming into a hobby, buying, participating, injecting cash flow into the market is what ultimately will drive prices up, right? Versus, and that's more of a, I would say not guarantee, but it's more, it's less, there's less risk attached to waiting a year, buying something and waiting a full year versus the other side of the coin, which is timing the market, right? Let's say a product went up 15% over a year, right? And because of the variables I just discussed, I just threw out there. Now, the other side of the coin, let's say somebody is trying to make those same exact gains, but they're trying to do it in short-term, 1-2 week, even 1 month flips, right? Well, right now, yeah. Right now you can definitely do it. Right now you can pick up just about any slab. You could pick up a single, you can send it to PSA. From the time you from the time you hit buy on TCG Player, or you buy it on an Instagram post or a Facebook Marketplace, and from the time you buy it to the time it gets to you, let's say it's been 5 days, it's probably gone up 2 to 3%, 5%, whatever. Pull a number out of thin air. Then you decide to grade that card because there's a good opportunity to make 50 to 100% more margin if that comes back at 10. Well, from the time you sent that off to PSA and get it back, right, everything has been going up. Like, let's say you do 30-day turnaround. In 30 days, that PSA 10 is probably worth even more now, right? So there's just, yes, right now, that kind of thing is very attractive. The people who are doing the quick moves, the high turnover, all this stuff, right? Like that kind of business model, they're killing it right now because they're just buying. They're injecting their funds. They're pulling it back out. It's a giant snowball, right? The more active you are in a market that's quite honestly just irrational like we are now. Markets can be irrational in a good way and a bad way. And for a long time in the bear market when we were 2023, 2024, it was irrational in a bad way, right? Everybody undervalued this stuff. And now we're it seems like we're kind of going the other direction a little bit. And this might sound like I'm taking a little bit more of a bearish um, outlook on the market. That's not really true because I believe in the stuff and I have large holdings in it, at least relatively speaking to what I deem large. But it's just I I don't know. I see a lot of this stuff and I see all this stuff going up high and it's like it's great, but I don't think people fully appreciate the power of being in this long term. Like people are so quick to just jump ship the second things go south, the second things start to get sour. Like if there's one thing you could take away from this, guys, I'm bullish on the more long term. I'm bearish on the short term flips and the quick turnarounds and the making the money quickly. And don't get me wrong, like if you're a vendor, if you're somebody who buys cards, flips it, sells, recycles that money, like that's a perfectly normal thing to do. That's a perfectly healthy thing to do. Like you're participating in the hobby. Like there's opportunities everywhere. Like you can make money in so many different ways in this hobby. Like it's insane how easy it is with just a little bit of creativity and a lot of elbow grease. Like you can outperform and just honestly just put your head down, focus, decide what you want to do. If it doesn't work, go to the next thing. If it doesn't work, go to the next thing. Eventually you'll find your niche and you'll find the thing that works for you and it's going to happen. But I'm telling you guys, like, just keep a long-term mindset through these crazy times, through the crazy spikes, through the irrational positive behavior. Like, eventually this stuff's going to go down, guys. It's going to happen. I'm telling you right now. That I guarantee it. Like, eventually we will get to a point where things are going to retrace. Like, it's going to happen. And it might not be these sets right now, but it might be the sets in the future. It might be when we get a huge supply correction and everybody stores LGSs are shocked. Like, just be prepared to stick it out and be ready to be here through the tough times because that's when the real opportunities present themselves. Yes, there's a lot of opportunities right now, but if you think there's a lot of opportunities right now, you haven't been through a bear market when everyone's just trying to sell and undercut people and the overall sentiment is just bad and negative. Like I'm telling you right now, guys, that's when the big opportunities are capitalized on. And a lot of the people today that you see are huge and they're doing well. They were the ones that were buying heavy when others were not back in the bear market. So I'm gonna keep this a little bit shorter today. But again, guys, if you appreciate this kind of content, really appreciate any kind of interaction. Just watching it helps me. But like any interaction, like a comment below. Let me know what your thoughts are on the overall market. Like, am I being too bearish? At what point, if we do get back into a bear market, like when do you think we'll start to see that? And I think we have some indication based on when they're saying they're going to like increase their print capacity, but that's yet to be seen. We have no real like concrete evidence yet of like how much the print capacity is going to increase, what specifically they're going to start printing more, any of that stuff. So let me know below, guys. What are your thoughts overall on the topic that we just discussed? And until then, next time, I'll see you guys.